Hi and welcome back to Erik Bank's Investor Day with the team Crypto and DeFi. We have the privilege to welcome Fritz Jost, Chief B2B Officer from Sygnum Bank in Switzerland. Fritz has the background of, before joining Sygnum, being the strategic lead on the Leontech initiative, and prior to that, Fritz spent over 20 years in investment banking in New York and London. Over to you, Fritz.
Thank you very much, and very well welcome to all the participants from hot Zurich. So I was asked today to talk about the digital asset impacting finance, and particularly the banks. And in that context, obviously, I want to talk about, first of all, what is the disruption within the banking sector? Number two, what does it actually mean as a bank connecting to banks? And what does it actually take in order to be relevant in front of your clients? With this, I would sort of reflect back to 2 years ago when we first had the discussions with banks, where very much the notion of the banks was, why should we do this? Now, at the time we said, look, what you see, the light you see is not the light of the end of the tunnel. It is the train approaching very quickly. And you better ask yourself, how do you want to position yourself within the digital asset ecosystem? Now, fast forward, today, the discussions with banks is a very different one. The discussion is more what and by when. So the disruption is obviously, and I know that a lot of people from the financial industry, they are in pain when they look at interest rates, low to negative. Then they have legacy systems, and particularly a big challenge in the private banking sector is how do you connect to the next gen? Next gen, they don't want to see people anymore. They just want to interact digitally with their bank, and certainly they not interested in equity or US treasuries. They're very much in crypto and NFTs, metaverse, etc. So for the banks, it really is a little bit like Shakespeare. It's to be or not to be in digital assets. And I really would like to stress this is not about crypto specifically. This is about digital assets in the most broadest sense. And today, we certainly see that the train has left the station. So it's not the question of when is the institutional adoption actually happening. It's happened already. And you see that in many different situations, certainly not only in the banking side, but you also see it with corporate treasuries. We have a lot of multinational companies which are onboarded, and they really like digital assets because it makes them much more flexible in terms of their treasury operation, to repatriate certain funds from foreign countries. Certainly the banking sector is being forced to offer it because otherwise the clients take the money, walk across the street to the competition. Obviously it's not enough when banks announce a little bit like JP Morgan or HSBC that they have bought a building in the metaverse and hang a painting or a picture of their CEO or chairman against the wall. So it really means, what does the client experience, how does the client experience actually change? Now, with this, when we look at what it actually takes, at least from our view, it's not just, as I mentioned before, digital asset banking. It's a much broader discussion, because if you want to connect to your target audience, investors, some investors will not follow across the fiat bridge into digital assets. But they're certainly very interested in investing into the digital asset opportunities. So it's important that next to crypto or digital asset banking, you also have a security offering from the asset management. So when you have a view as the CIO of an organization, that your clients can actually do the follow that advice, either by direct investment into digital assets or through securities. And last but not least, tokens and tokenization, it's certainly, I would say, 3 to 4 years behind the wave of the crypto market, but it's coming. Now, we have been very active in tokenization. I'll talk about that later, because when you look at digital assets and the ecosystem of digital assets, the journey is the destination. So it's important to partner, if I may say, not with a one-trick pony, that the one moment you want to expand your offering, you have to change providers. Given that we have this journey is the destination, we have a very modular offering in order to facilitate the starting point of banks. One, and I would say probably the most used case, is banks wanting to and aiming to make digital assets, particularly cryptocurrencies, available to their clients as an alternative investment class. So that is certainly the road chosen by many, but not by all. We have a lot of banks, particularly private banks, they are very keen to make non-bankable assets bankable. Several reasons, obviously, to increase assets under management. Number two, and I think that's very important, to become much more relevant in front of their clients, to really know holistically what is the asset, the overall asset, and how is the asset allocation in the different asset classes. There's other banks who are mainly focusing, like commercial banks, they're focusing on the discussions around raising capital, be it debt or equity, provide funding, and that is obviously something which, particularly from a life management perspective, you can significantly increase through tokenization. So tokenization is definitely something which you need to keep on the radar screen, because if the land registries are going to be digitalized, you do not have to do the mortgages the traditional ways, and it allows banks to far more dynamically hedge their risks, which quite often are very concentrated in the mortgage market. The asset management, I don't want to talk more about this one, just it has to be on the radar screen to be relevant in front of your clients. And the last point we normally remind our partner banks is, don't forget when you transform part of your traditional fiat business into digital assets, do not lose the annuity revenue streams you create in the fiat world, particularly when it comes around the security lending. Security lending, obviously in the digital assets world, it's lending against crypto, and an extremely relevant topic for large investors who normally do the rebalancing. That means they may want to look for leverage. And what we have seen, we have a lot of crypto foundations or clients coming from the crypto world. They need fiat, but they're so convinced and dedicated to digital asset investments, they don't want to sell the digital assets in order to buy fiat, to buy real estate or other investments. They obviously lend against their holdings to stay invested. And the core, and this is something which sounds very, very generic, but it is a very important aspect, is the custody. Custody, how is the custody set up? Because custody is at the core and makes those investments which you hold banking grade, but it also should be highly secure. And for this, the big aspect in custody, it's safety, 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 or security, security, security. And I can make that statement, particularly there has been Coinbase, the annual report for the first time just came out 24 hours ago. And what it stated for the first time, they have about 257 billion assets under custody, that because they held on a omnibus account, that the clients, their clients, do actually have a counterparty risk to the venue. That is a very different topic in Sygnum, where we have for every single client a segregated wallet. Very important, and particularly in the context of the banks, which may outsource the whole value chain to Sygnum, all their clients' assets are on that fully segregated wallet with us. But that means, because it's a segregated wallet, there's no counterparty risk to Sygnum. The wallet is owned by the bank. Second, it's off balance sheet. And third, there's no capital need to put against those client assets. A very important aspect, So when you actually buy, sell, and particularly hold crypto, do look at how secure the client's money is actually held. Now, trading is another aspect which there is a lot of different ways to actually trade or to provide liquidity to the market. We have decided that the ultimate choice of what model you want to go for is very much driven by the ultimate truth lies in the blockchain. So therefore, we go for the insourcing of global liquidity providers and actually transfer the best price to our clients. There's other ways to do this, so-called all-in price, but particularly when you look at the market disruption which we had in the last couple of days, if not weeks, that I'd rather know where I get executed fully auditable versus someone who tells me this was the best price and does a bid offer around it, which you may actually drive 3 lorries through. So we have best execution, which goes straight into the client's wallet. The other thing is we are very selective in terms of the number of cryptocurrencies we offer. More is not always better because they need to be relevant. There needs to be market depth, liquidity, but also most importantly is market data. Because market data, once you are in the regulated space, it means that every crypto which comes in has to go through a thorough anti-money laundering test. And that means you need the data to go back on the chain to validate not only where they're coming from, but also what addresses they have been associated with. What obviously crypto means, it's 24/7, 365. I think that is a prerequisite to stay ahead of the game. Then another thing which should not be underestimated, it's the anti-money laundering, which we have to do as a regulated bank. We are regulated like any Swiss bank, and we have developed together with FINMA, this process has been FINMA approved, that all the crypto coming in has to go through, we call it the CAMEL tool, the crypto anti-money laundering tool. Whatever you do in terms of a go live, you may not want to allow clients to do transfer ins or transfer outs, but put this on the roadmap. Every single bank which we have gone live with actually realized that they knew very little about their clients. The most telling story was a retail bank which went live with us. So they mainly have retail clients. And the day they announced to their clients, then open for business for crypto, 75-year-old grandmother mapped as retail asked for a transfer in of the equivalent of $8 million in crypto. So much about knowing about your clients and underestimating, and every single bank we have actually go live has then discovered how many of their clients are already invested and now looking for a safe place, a regulated place to keep their investments. And, I'd like to state Paul McNulty, a former US Deputy Attorney, has to resonate, because if you think compliance is expensive, try non-compliance. These days, banks lose more money in terms of paying fines than the investment banks in the 90s on trading. So this is important, and I think that is why we see that there is institutional adoption, because they're regulated banks providing the custody, access to market, and we have seen the largest crypto firms, crypto foundations, all the way to corporate treasuries of multinational companies who open up an account with us, because that's exactly what they're looking for. Now, moving into the tokenization, I did mention this is something which you really have to keep on the radar screen. Yes, it's a little bit early, but we have been in every single one of our verticals on our tokenization platform, being very active with many different issues, be it from venture capital to small, mid-cap, even real estate, and particularly art and collectible has been hugely resonating. And we are still the only bank which not only, it's not good enough if you tokenize something, it stays the same, but you also need a marketplace in order to have liquidity and transparency secondary market. And we have an open marketplace which allows just for that. And the one innovation which is still unique, everything settles on chain. In traditional tokenization situation, the issuer issues a token and sends it to the wallet of the investor and tells him, please pay to HSBC, my fiat account. Then the investor instructs his bank, Credit Suisse, to pay the money to that fiat account. We have created a digital Swiss franc, which is one-to-one packed with a escrow account of the Swiss National Bank. So this allows instant settlement, atomic settlement on chain, avoiding any slippage or T+2 counterparty risk, and has really been a very successful not only settlement token but also payment token. The other thing which obviously has been asked in the morning is the Swiss regulation is very advanced. We have a DL2T law from February last year, which really allows us to actually tokenize the underlying is the security. And we did this very innovative and first tokenization of a Picasso. And the Picasso, in the old days, you would have to take the Picasso, put it into an SPV, and then tokenize the SPV. Today, we don't have to do this. We can actually tokenize the Picasso. The Picasso is the actual security. And what that means, we have the opportunity to actually combine an investment, a financial investment, with emotion. The first launch we did with wine, because people like wine, it resonates. And with the Picasso, we have taken a step further. So the tokenization of the Picasso, it's about $4.5 million worth. It's now actually appreciated by 35%. So everyone who has invested has certainly been a very big smile on his face. And the way we did this was to really make sure that the investors own the painting or part of the painting. And that means every single investor can potentially be the owner of that painting eventually. And we have included all corporate finance mechanisms such as a squeeze out, which allows the majority owner of the tokens to actually buy out the rest of the investors, token investors, take the painting and hang it at home or do a private sale. But also this tokenization allows us to not just put something in an SPV and 3 years later or 5 years later it sells and then hopefully you have some capital gain. What we also included is a drag along. A drag along allows all the token holders to vote. And if they think that Picasso contemporary art is toppish, they can vote to sell the painting and monetize the gain. There's even other functionalities such as provenance. A painting or a car or any collectible lives also of the provenance, the history of the artwork. And the painting, even though tokenized, can be wall-to-wall insured, hung at a museum to further increase value and relevance. So what you see is what you can do with the tokenization is something which has not been able to be done in the past. And it really links that investment also with an emotion. Obviously, the world has moved on. We have already tokenized a number of paintings, a number of artworks, but what obviously is now far more en vogue is not the paintings, but the NFTs. So even on NFTs, obviously going back to the Picasso, what we have seen, most investors who actually invested in Picasso could actually have bought the Picasso themselves outright. So what we now realize that tokenization, unless you have really succession planning, where you can also use tokenization within families, where you tokenize a estate, and some family members which are cash strapped can actually sell their tokens to the family members who are cash rich. That is something which can also be extended into the NFT world. And the NFT world, at the moment, most NFTs, when they were launched, were not that expensive. These days, some of these NFTs, as we all know, have gone completely through the roof. So a tokenization or a fractionalization makes also sense to make that, to allow more investors to actually be invested in that token. And with this, I give you a little bit of a snippet in terms of what we have done with CryptoPunk at Sygnum.
I'm at Zurich Paradeplatz on my way to Fame Gallery, basically walking through the traditional home of Swiss banking. The rails that have guided our thinking on what comes next in finance are currently being challenged at an unprecedented pace. The developments in technology which are non-linear have catapulted us in the exponential age. I'm very excited today to announce Sygnum's next step in helping to embrace this change and helping to create future finance. The Sygnum team has recently purchased CryptoPunk 6808 and leveraged its tokenization stack Designate to fractionalize ownership of it. From January onwards, Sygnum clients will be able to subscribe and trade the CryptoPunk or fractions of the CryptoPunk on our secondary trading platform, Synex. 10,000 CryptoPunks have been created by the two co-founders of Larva Labs in 2017, thereby creating the very foundation of the emergence of NFTs. NFTs are the most pure manifestation of what the blockchain technology enables us to, namely ensuring uniqueness that allows us to transfer originals and not copies between parties as long as both have access to the internet. Now, creating a scalable way to prove uniqueness of anything of value very much matters. Now, it is correct that innovation and pushing things forward also comes sometimes hand in hand with exaggeration, exuberance, and hype. And some of what we've seen in 2021 in the NFT space certainly also falls in that category. At Sygnum, however, we look beyond the noise and have been investing in scalable infrastructure and use cases around this that we will be informing you about very, very soon. In the meantime, our CryptoPunk 6808 will be displayed in our Zurich and Singapore offices for everyone to visit to discuss crypto, digital assets and NFTs, and we look forward to having you on board and taking you on board our journey towards future finance.
All right, so that was an indirect invitation by Matthias. So the CryptoPunk is here in our office. And as I couldn't make it to Stockholm, you're more than welcome to visit us in Zurich. Not only do we have the CryptoPunk, but we certainly have also a good coffee machine. So the door is wide open. Now, moving on into the banks. And there's many banks who really ask themselves, how should we approach this? What is it we want to make available in what sort of sequence of a go live? Now, what we normally say that a go live, we normally make less than 60 days, banks can actually go live with Sygnum. We have not had a single bank being onboarded in more than that until their first client actually bought crypto. There's different ways to actually go live. We normally recommend that you have a go live which has some manual intervention, is not totally integrated on APIs, simply because most banks, they really want to send that lighthouse signal to their clients, we open for business. Also to avoid that their clients eventually depart. And as we know, it is much, much easier to do more business with existing clients rather than actually get clients from the competitor back into the door. So the go live is normally with a small range of cryptocurrencies, which you then over time expand. You certainly have to have on the roadmap things like staking, DeFi, because clients today, they may about a year ago be happy that they had their money or their crypto money with a regulated bank. Now, obviously, they also want all the advantages which normally can be harvested in the non-regulated space. Staking, for example, was still the first bank which does offer staking on ETH. We have ETH 2.0, which is locked up until they go live. So a very interesting opportunity to actually, make that notion of crypto is a little bit like digital gold, because gold has a negative carry. These days, that's absolutely not the case. You can actually have investments in crypto and generate returns. The other thing which we remind our partner banks, do have the journey is the destination. So that means go live with an offering, make sure that your organization can grease the wheels to get used to it, put the transfer ins and the transfer outs, as I mentioned before, on the roadmap, because they are a significant value driver within the whole assets under custody, stickiness with the clients, and lending. Lending, maybe quickly, as it's very topical today, we've been in the lending business for crypto for now almost 2 years. And even though in those 2 years we had many drawdowns, never ever did we have any losses. So if managed properly, then it is a very high quality annuity revenue stream, which you can complement with your traditional revenue streams in the fiat world. So this is just some ways of going live. And we have in our portfolio private banks, which are now all gone live with crypto, but a lot of them actually work on many different projects to make non-bankable assets bankable. So this is a value proposition which a lot of their clients have actually started to appreciate. We have also retail banks. One which we mentioned here is a savings, call it a retail bank focusing on retirement planning, and they now have taken the decision to allow also crypto in their long-term savings plans. And they consciously also took the decision to include crypto in their offering, because they wanted to connect to the millenniums and obviously Generation Z and the next gen, because connecting with a traditional offering would have been very, very difficult. And in the meantime, I'm being told that even a very dusty old retirement planning bank has been able, through the extension and expansion of his offering into digital assets, also being able to rejuvenate part of its client audience. So should not be underestimated how that impacts your ability in order to connect to your clients and be relevant in front of your clients. And what also needs to be mentioned is the rollout. It's something which you need to have on your I'm just trying to actually, if you, there we go. I need to move the next slide here. As I mentioned, in terms of the journey is the destination, we have seen now, particularly in the DeFi, obviously last couple of days, a very topical subject that you can, if accessing the DeFi space, really you see more and more how the traditional finance or money markets and lending pools come together, and clients will actually aim to be looking for those opportunities and harvesting returns. So our recommendation is really team up with a provider which can be a partner on the journey. Crypto alone is not enough anymore. It was enough maybe at the early stages. Today, you need to be able to service your clients on tokenization, giving them access to the DeFi, be able to custodize their NFTs, which they have invested in, and also be relevant in the metaverse and other topics. So this is what I quickly wanted to share with you. I rather give time to a couple of questions if there are any, because I don't want to talk about Sygnum. This is more to talk about the trends which we see, and I'm happy to be challenged on some of these trends by yourself. So happy to answer any questions you may have.
Okay, thank you very much, Fritz, for a great presentation. You talked a little bit about the Picasso tokenization, which I also think is very interesting. What other potential tokenizations do you see coming?
You will see that we have obviously a number of pieces of art, particularly in the contemporary space, will be similar to the Picasso, which are coming. So those are being made ready into the marketplace. So a little bit similar to what we have. What is certainly much more interesting, because it's new, innovative, is venture capital, particularly of the capital calls, which need to be handled. That's certainly something which is going to go live fairly soon. We do obviously look at the land registries, and I mentioned before, the moment these land registries are going to be digitalized, we can actually really directly tokenize the building, and I'm sure that banks will be holding those in the shape and form of tokens. Because in the old days, if you want to offload your balance sheet, you need to take the assets, put it into an SPV, and then sell it into the marketplace. If you tokenize it, it's much, much more dynamic. And the last point in terms of the real estate, we are active in real estate, but what we normally do, we bring the real estate from, be it Middle East or some other places on planet Earth, into Switzerland, because it's easy to tokenize it in some jurisdiction. But if there's no legal framework, there's no enforceability. So when we tokenize, whatever we tokenize, we do bring it somehow into the Swiss regulation that what we tokenize is actually legally enforceable.
Great. And speaking on regulation, Switzerland have a quite unique approach in taking this legal framework forward. And what's your view on that, like on the Switzerland approach in an international perspective in terms of regulation? Do you think other countries will follow in Switzerland's footsteps, or what do you see?
They have to, particularly the fleabag of Europe, which is still debating now. At least yesterday, that Germany came out in at least the tax treatment of crypto. So now we know the moment you hold it for longer than a year, it's not taxable. If you have a robust legal framework, it will act as a catalyst of that industry. And we obviously have a lot of discussions, because we are in our internationalization plans looking at the jurisdictions outside of Switzerland and Asia, and very much in talks, because for us, just going somewhere where there's no legal framework, we cannot do more, or we can't do things better than we can actually do in Switzerland. But Switzerland, together with Liechtenstein, has been at the forefront, now also with the MAS in Singapore, on regulation. And regulation is not a threat, it is an opportunity to really give the guardrails to that business. And I can only encourage the regulators in Europe to actually be certainly not the first mover, not a fast mover, but at least to move.
Yeah, I agree. And with this regulation coming to other countries, do you also see competitors like Sygnum Bank popping up into other countries? Like you're one of the first crypto banks in the world. Do you think that there will be other players in this space popping up as regulation comes?
I think there cannot be just a handful of providers. There have to be certainly more. There is some limitation to it. There's certainly also popping up providers which are providing just maybe costly solution or some trading algorithms. So we have certainly seen across Europe that certain modular providers are positioning themselves so they're ready once the regulation actually also allows them maybe to have more licenses to become a bank. But I think the biggest threat, like in the traditional fiat world, is not being disrupted with the fintechs, but it's more if a tech company gets a banking license, then they really can disrupt. And I think that big white elephant is still out there.
So final question, what are the main trends that you see coming that will shape the crypto market in the future?
Well, I think as the crypto market becomes more mature, you will certainly see that clients, they can actually distinguish in terms of the different providers. There will certainly be more regulation, and the clients want to have their investments in a secure place. And is it about the banking grade? I think it really allows it. Once you have it banking grade, then you have much more flexibility in order to spend that money, to transfer the money to other white listed addresses. So regulation, even though it makes it more complex, more time to market, it is a good thing, and there will be, in terms of regulation, it's the benefit of the investors. There is a little bit of a challenge in terms of the regulation making it more centralized versus decentralized, but the last couple of days have shown that being with a regulated bank has massive advantages.
And heading forward, where will Sygnum Bank be, do you think, in 5 and 10 years?
We will never be a universal bank. So our aim is not to become a UBS or an HSBC with a very strong nexus to digital assets. I think we will stay, and I think the innovation is complex enough that you can be a provider and a specialist in digital assets. And we've seen the many challenges, now also opportunities, be it the DeFi, which I mentioned before, also metaverse, which becomes more and more relevant. We will have CBDCs, so central banks will actually have their own stable coins. So I'm convinced that, I call it pure player, not niche player anymore, but a pure player in the digital asset ecosystem will be the strength of a Sygnum and here to stay.
Thank you very much, Fritz, for joining us, and thank you.
Pleasure. Have a good day, and talk to you soon. Bye.
Bye.